Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor. Oh, you're trying to learn from those who did it. Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all.
Real estate experiment, what is happening, y'all? Today I have Mark Ritter in the lab with us, CEO of MBFS, which is Members Business Financial Services, correct? And
Yes.
Nu Direction Lending. We had to try that a second time because I actually mixed myself up. There's so many credentials here in our bio, and Mark had to make the correction. So speaking of that, Mark, I'm so excited to have you in the lab because we get so many folks who come in. They're helping the investor, either it's a seasoned investor or a new investor, and it's all about having the right tools to our tool belt. And you founded a company that does just that. However, not everybody knows of currently what it is that you're offering. They know lending, traditional lending, but from a credit union perspective, you've piqued my interest already because we haven't had anybody who stepped on our show. We're at episode 100 and might be 130 plus by now. So we're super excited to have you in the lab, but I do like to give the presentation that you deserve, the invite and the intro, and definitely want to give you an opportunity to introduce yourself to Experiment Nation. So if you and I meet, Mark, and I'm sitting next to you and I shake your hand, what's the elevator pitch? What do you do? What can you do for me, Mark?
Sure. I'm the CEO of a company that does one thing, and we help real estate investors get loans through credit unions. We have 11 credit union owners, and we also have a division for Nu Direction Lending that helps get people get small business loans online in a fast, friendly environment. But we do, most of our business is real estate loans, and we're the best secret in America that a lot of people just don't know about. So we like to spread the word.
Got it. Well, thank you for that intro. And so you've already got my attention. I told you from the first time that you stepped into the lab. So the question I have for you is a very simple question. What is a credit union to someone who's never even heard of that or has heard of it, but not really tapping into it? And why should they?
Sure. And most people, if they've heard of a credit union, maybe it was something that their parents mentioned that for a place that they worked and they have this account there and they give good deals. But when you walk past a credit union, it has a teller window, it has ATMs, it has loan officers, and it looks and kind of feels like a bank. But when you look under the covers, it really acts entirely different in that it's a not-for-profit financial cooperative. And that's really where the start of the difference is, in that nobody owns a credit union. It's owned and operated by the people who have accounts there for the people who have accounts there. And what happens is you can have, they're able to pay a little bit more on deposits. They're able to charge a little less in fees, and they're able to charge a little less on interest rates. And historically, going back 100 years ago, credit unions started out in small towns in these underbanked areas where there wasn't anybody in town. So farmers got together, and then you would hear a lot. My parent was a school teacher and they had a credit union. And if you were a teacher, you could open an account there, or some corner factory or something like that. But they've really evolved over the years and become, there's over 5,000 credit unions in America. And specifically in my niche of the world, a little bit over 20 years ago, credit unions received the authority to get out there and start helping real estate lenders and small business owners where they couldn't before. So if a lot of the veteran people say, I never got a loan through a credit union, they don't do that. Well, that's true at some point. But we had so many people that had accounts with us. Currently today, there's over 100 million people in America that have relationships with a credit union. Well, where's the best place to have that conversation and try to get that loan from when you're looking to grow your business, where you already have that relationship and where they know you? And it's really just kind of grown from there.
So, Mark, if I'm listening to this, I'm like, okay, it sounds like I hear the word union and that throws me off because and then another thing you say it's non-profit. So I'm like, okay, so I'm trying to put the pieces together here. Can you take us and the reason I'm asking this question, Mark, is I truly believe that people can't do business with you until they understand what it is that you do, right? So
Sure.
to put things into context for people, can you explain to us how a credit union is different than the way a bank operates? Because I think people are, very similar with a bank, even though we're not getting any interest these days. It's points or whatever. Why is it different, and how is it different? So we can kind of really contextualize this concept.
Sure. Well, I'd hate to say that I'd like to say my money and that I give you is so much more special than the other guy's money. But when I give you that real estate loan or the line of credit or the construction loan, it's a commodity. That same dollar is the same dollar. What the difference is in the organization is there's really two areas. First of all, it's a cooperative institution, so you have to become a member of the cooperative. That used to be very difficult for people. It was, if you only worked at a local factory, it was only for their employees. Or if you were only a school teacher or what have you. But in today's America, if one of your listeners walks past a credit union on the street, there's probably a 95% chance they could walk in and open an account. And it's probably over 95%. So that's the first thing, is you have to become a member of the credit union. The second piece that really differentiates us is the process in the conversation. This is, since we're in, and when I say not for profit, credit unions aren't a charity. They're just simply run on a not-for-profit basis. The biggest credit union in America has over $100 billion in assets to them. But most credit unions today are a few $100 million in assets. Think of them as the community bank of 25 years ago that used to be on every small town in America, got merged out. In the cooperative basis, you're trying to make that loan and have a conversation with the member and do what's best for them. And because really develop that win-win institution. Whereas if you go to that hard money lender, you go to the big bank, it is, I'm trying to win and you're trying to lose. Mm-hmm. So we really focus on having those relationships with the real estate investor that we can both grow successfully in the future. You can have what you tend not to see in the credit union space is, this is our box that we lend in and that's it. And if you're in that box, you can get the loan. And if you're out of the box, you're done. So we really can try. You could walk in, and many times it's not unusual. If you want to meet the CEO and have a conversation, you can do that. So it's a much more approachable, friendly process than your typical commercial bank or other types of real estate lenders, because it's for the future.
Can you, okay. So, and I'm so glad you went there, Mark, because one of the things that you said, it's a win-win, and I love that. And I'd love to understand both sides of it. So from what's in it for you, when I lend, for example, we'll use a hard money lender, for example. Hard money lender wants to lend his money out because he's going to have a higher interest rate, win situation for him, his money's, or him or her, his money's going to work, right? For you, it's money that you didn't have. You're able to leverage it. Whatever project you do your your analysis, your projections based on that, the after repair value, whatever the case might be. If you're using hard money, it's a win-win. From a lending perspective, very similar. Traditional mortgage, it's 30-year, 15-year, whatever it is that you may want to choose. If your tenants pay the mortgage, everybody's happy, the principal interest is paid for, the bank's making their money on the interest, etc. Cool. From a collaborative, okay, let's all pull our money together. How does it work in that sense? How do I start the relationship, and how does it benefit me if I'm listening? And how does it benefit also the members, right? Like, just so we understand how that's kind of like the win-win spread is benefiting everybody.
Sure. When we talk about a cooperative institution, that means you have your money in that account. And for every dollar in that account, the credit union's probably lending out about 85 to 90 cents on there. So you're not dealing with borrowed Wall Street money. You're dealing with local money that local residents and people in the community put in for, and then it's being lent out in the community. Yeah. And it really isn't. They really look at it as ways to strengthen the community.
Yeah.
And that money, it's kind of like when when it's around Christmas time, they talk about buy small business local.
Yeah.
We're lend local. We're lend regional. So what happens is it makes you're lending and improving a house and making a better project that somebody local is going to live in, that they can have a better community, that they're going to have a job with, and you made properties better. You're making income that you're going to spend locally, and we're charging you a little less, and which puts more money in your pocket that you can go do other projects as well.
Yeah, I
so
love that.
It really becomes the cycle of money is a powerful effect in our lending business, and the profit from the credit union, if you look at their financials, we're not losing money. We're making a little bit of profit, but that's put back into better services for the community. That's put back into better products and services, and the donations to the local high school, or to hire more people to go do things more effectively. And one unique thing about the credit union space, most credit unions, they have a couple branches and they have a few $100 million in assets. They would be a small community bank. But one unique structure about the credit union business is they also work cooperatively with each other. And that's actually the whole basis for our company here at MBFS. If you go to a small bank or a small credit union, you could have a great experience, but their lending capability, if you're in Manhattan or a big city, heck, that's one property if they can handle it. What the credit unions actually do is work cooperatively. We work with about 75 credit unions now. So really, when you meet with your local credit union that's nice and friendly on the corner and wants to help you, you're dealing with the power of hundreds of billions of dollars in assets to put that money to use for there. So you're getting that scale of working with a large lender, but in a community lending atmosphere.
I love that. And it's funny the way you were saying it, as you were speaking, I'm thinking, yeah, keep it in the family, right? That's usually kind of the saying that I say when I send someone a referral or something like that. It's within the network, and that it's going to benefit someone that's in that proximity and that's within the union, if I understand correctly, right?
Yep. Yeah. Here's the nice thing why I love my job so much. Nobody's out there screaming on the streets protesting against their local credit unions that they're unfair to people. Yeah. By our nature, we're part of that community and looking for it. It's credit unions. The board of directors of a credit union is run by the people and elected by the people who has accounts there, and everybody gets one vote.
Oh, so let me ask you, Mark, can I, if I I'm listening to this, I'm like, I'm already bought in. I have some money sitting around in these, again, institutions that, again, I have no ties to, that I might consider transferring over. What are some of the incentives that you give? Like, can I buy bonds throughout the credit union? Can I buy a CD? Like, do you have these kind of products that can help at least, would that help, or does that kind of go against what you guys are trying to build? I'm curious.
So what I would say is just about every product that you find that a lot of credit unions offer insurance products. We offer retirement accounts. We offer 401, credit unions have 401k plans or helping you with your IRAs, the checking accounts, the online banking, your mortgages, your auto loans that everybody knows they can get. So really, you're getting that entire breadth of products that you see in the commercial banking sector. And credit unions do very well. One of the knocks on the credit union space used to be the technology. In that everybody had their, the big banks had all of these apps and sophisticated things, and you had to go to the mega bank to get your online banking. Those days are long gone. But I'll put the credit union service and the products behind it next to anybody. And I was actually traveling this week, so I notified my credit union that I used my credit card. I notified them that I was traveling. I was able to pick up the phone and in a minute or two talk to somebody and have a conversation.
Yeah.
And those are the types of things where I think the value really shines through. Yeah. When you can talk to somebody. We always talk in the financial services that we want that relationship. We want a relationship. We want to grow that. Well, this is that opportunity.
Yeah. That's great. It's funny because, or quite interesting, I should rather say, it's come up a few times of, building the relationship, the whether it's the bank or the credit union, in this case is your friend, having the ability to formulate that relationship for the long term can truly benefit you as an investor. Can we talk about, you mentioned this, and I want to make sure it doesn't slip through the cracks, right? You mentioned it in the beginning that, there are the terms can, defer. Maybe you're not boxed in. That kind of, piques the ears of some investors, because it sometimes there's a hard rule and you get boxed out and maybe you don't qualify. What are some of the criteria that you would look at for someone who what I'm trying to highlight here are maybe the benefits of having this long-term relationship. Is that factored in at times if you're maybe looking to get a loan on a property and you've been there for 15 years and you've been doing is that something that you look at, the very nuanced criteria?
Absolutely. The length of the relationship matters quite a bit to the credit unions, and that counts for it. Because they look at that. I always say somebody who's a good consumer member and who handles themselves responsibly, that's 90% of the credit criteria. So the length of that relationship matters, and that they can look at you. Usually, cash flow in financials is the same at a credit union as it is in a bank. I can't change accounting and math. So we do look that if and this past year is a great example. Yeah. We've looked at the credit and cash flow and all those other types of things that people do. But if you had a bump in the road because of COVID, and it's much more an event than a trend, we can explain that through. And we can have that conversation with the people in the room who understand it because they're fairly close to the vest and understand what happened. And it was the same thing back in 2007, 2008, when we understood that people had some rough times due to no fault of their own. But when you're purchasing a property, if you're doing renovations and you need some interest-only payments till it's built up and ramped out, we can have that conversation to make it fit for you, rather than just saying, here's the product, you're either in or out. And many times we look at doing combinations loans. If you want to bring together your portfolio to pull some equity out of your property, we can look at that. Now, if you bought your property at sheriff's sale for $1,000 and you're trying to get $200,000 out of me, next month. Well, we got to have a conversation because we got to have some, we have to do what's best and to protect those members' assets and deposits there.
Yeah.
So we're not stupid lenders, but we're fair lenders and we're conversational lenders. And we can have that, find out what you're doing now, with anybody. And you've probably seen this many times. That first loan is sometimes the hardest loan with somebody. And then once you like that experience in the process, then you can come back and get the terms you want, where you're picking up the phone and calling your local relationship person who understands and knows you, and you've had that piece going, where it's underwritten by somebody in that marketplace who's getting you. The decisions are there. And it's in their benefit to make good credit decisions and get you and help you succeed.
That's phenomenal. I thank you for explaining that, because I think that was really important, because, especially whether it's, from a financing perspective, a lot of our listeners are there. It's, that's usually the challenge, right? It's just making sure that you have that right partner in your corner that understands either what you've been doing for a long time, or maybe understands what you're trying to do from the beginning of the relationship.
Here at our firm and in the credit union space, and I don't want to paint the credit union industry as one homogeneous ball. There are many, we have credit unions in Atlanta that lend in some of the poorest areas of the country because that's their mission. And that's what they want to do. And they want to drive quality credit. There are people in Atlanta who lend on downtown skyscrapers. And there's everything in between. But some of those characteristics and values are universal. We do small loans in small towns throughout the mid-Atlantic states, and we deal with some of the largest cities in America and everything in between. So that's nice, where you can have that relationship and grow as you grow.
Yeah. And Mark, considering that, all cases will be different with folks who are looking to get, started. But as far as, do you have any, case studies that were that you can maybe share with us, and if someone's listening and they're thinking, well, do I have to put the traditional down? For example, I'm looking at this investment property. Is it going to be your quintessential 25% down, or is there a way, depending on, what I have going on, whether it's my credit, whether it's my, the cash flow that I have outside of other businesses, like will again, I just want to make sure I echo this for our listeners, is will you literally look at every person differently, or is it, oh no, actually, Ruben, it's the standard, pretty much the same 25% down when it comes to an investment property? What can you say about, again, the different cases?
Yeah, we have a lot of our folks want 20, 25, depending on the market and condition. It could be 30 plus. But what we can do is look at you globally. Is there a way that we can pull that equity out of other projects and finance that through on your first deal or two as you start out? Did you buy it cheaper and now it's stabilized and we can pull that value out? We really focus on that global picture. And if it's your first project and your first property, we're going to really be looking, and I always use myself as the best example. I'm the worst handyman in America. My wife won't let me paint the walls. If I try to get deep into rental properties, I'll fail miserably, because all I would have to do is hire people to do the simplest things. So we want to make sure you have the ability to do this and it fits in your financial plans. We have people who use their self-directed IRAs to borrow and grow in that first property or two. We have people who pull that money out of some different plans, and maybe we do a home equity line for that first down payment to get you through till you get that snowball moving and make it work out. So yeah, it is truly a global look and a global conversation that will fit something for your situation. The nice thing is, I have a credit union in Danville, Pennsylvania, which is close to where I grew up. It's a small town in Northeast Pennsylvania. Many lenders that you would go to would say, I don't want to, you're in a small town in the middle of the nowhere. But my local lender there, they want properties in that marketplace. They want to finance locally. So many times, if a real estate investor, you get judged by the market you're in. But that credit union is looking to put money in there locally.
Yeah. Is there any programs that give incentives for, you to, for example, one thing I'm thinking of, there's like an Invest Atlanta. I was just listening to another podcast and I was kind of blown away of the amount of resources for local businesses, et cetera. What kind of, are there incentives for, I think you just touched on it, but we're even talking about small business loans here as well, right? Are you saying that the most of the incentives are, local? And so if I come to you, Mark, and I say, hey, Mark, I'm based out of Atlanta, you would then look at those areas to see what some of the incentives are for that area? Is that how it looks like?
Yeah, credit unions are very friendly in terms of looking locally. Many of them, Credit Union of Atlanta is a great partner of ours, and there are a CDFI where they get those incentives and to work with programs locally.
What's CDFI for our listeners?
A community development financial institution. So they're really looking to lend ultra locally so they can grow communities and make them a better place.
Yeah.
So absolutely, if there's a local area and you want a partner, credit unions love to help out in economic development programs. We are a big fan. If you have a small business, we love SBA loans. We just did 8,700 PPP loans. So we are we're a big fan of lending in the community and helping out where we can.
That's awesome. What are the best ways that one should get started, and what are the biggest mistakes people make? It sounds like time is of the essence for one thing for sure, but I'm curious as what are some other things out there we should be looking out for when looking at these opportunities to work with credit unions like yours?
Sure. The biggest piece is to look introspectively first. Do you have a relationship with a credit union that you haven't really thought about? And many times credit unions are huge auto lenders. Sometimes people get that loan through the credit union and they don't kind of think about it twice again. Well, you have that account in a relationship. And do you have within your immediate family and immediate friends, hey, what's a good credit union? And many people are very passionate about their local credit union and love it. So you usually get some very good answers back. The second piece is think about your neighborhood and who have you walked by for years as a local lender, and check out their website. They usually say whether they're doing it or not. And if you're still not sure who to go to, MBFS, we deal with, like I said, over 70 credit unions. And many times what people do is contact us and we match them up with one of our lenders or a local credit union in their marketplace. And if you're in the middle of Utah and we don't have a credit union in your area, we know who's lending and do a warm introduction, because there's a whole network, a nationwide network of companies like us that just help real estate investors and small business owners access that credit union.
Got it. And Mark, one thing that came to mind as you were speaking is you mentioned the word partnerships, and you said, partnerships with local lenders, et cetera. Just so we really understand the concept, does a credit union partner also with a bank, or do you have your own bank in-house? Where, like, let's say I want to make a deposit and open an account. Is that through a strategic partner of yours or a strategic local bank?
Yes, MBFS ourselves is not a credit union and a depository institution.
Mhm.
We're what's referred to as a credit union service organization.
Nice.
We're owned by the credit unions for credit unions. And think about it this way. If you had a bunch of places, when you deal with a lender, they all have somebody that underwrites loans. They all have a lender. They all have a loan servicing platform.
Mhm.
Well, what credit unions do is they say, heck, let's form a company to do all of this together, and it lowers our costs.
Mm.
So instead of, whereas a dirty little secret in the banking industry is they don't work well together, but credit unions are very friendly across one another.
Mm.
So most of the time when we partner with other financial institutions, it's community development lenders or other credit unions. Sometimes it's banks, but not very often. Because
Okay.
we tend to play together nicely, whereas your local two banks tend not to play together as nicely.
And I'm sorry, maybe you mentioned this, Mark, just so I understand. I understand the lending piece, but you said you're not a depository institution. So then did you say you're not partnering with local banks?
Oh, no, we typically don't partner with local banks, but you make your deposits in the local credit unions. They'd love to set you up with savings accounts and checking accounts and credit cards and all and your online banking apps and mobile deposits and everything that you have at the biggest banks in America.
Wow, no kidding. Yeah, I just want to make sure we touched on that, just because it sounded, because I know you don't call yourselves a bank, or the organization within doesn't call themselves a bank, but you can still make these physical or virtual deposits just like any other bank.
Yes, absolutely.
So now, this is fascinating because I could see, this, you forming this long-term relationship, you start graduating with the customer or the consumer. Let's talk about commercial lending. As far as, you talk about underwriting in-house, et cetera, having a large amount of pool of money to lend. Is it the same idea as far as your traditional commercial lending? Is it different as far as, the experience of kind of the underwriting and the due diligence, et cetera, what you qualify for when you're buying an apartment building? How does that work?
Sure. And I always preface it where as you go up the scale of lending, it tends to homogenize and be a little bit closer to the banks. Just because this week we approved a $20 and $25 million loan. Well, now we're getting into some serious dollars where I got to have things tightened up a little bit. Where you really find some benefits into the credit union is, once again, our rates are good. But hey, in today's market, everybody's money is pretty good. It's pretty low market rate. But we can get those deals done. We have the liquidity, and nothing you do through a credit union will ever have a prepayment penalty.
Can you elaborate on that?
So when you get your loan through a credit union, many times when rates dropped suddenly, people found out what a prepayment penalty is. Because when they tried to lower their rate, they found they were locked into the deals with their local bank or other lenders. And they had very significant penalties if they wanted to refinance this down. At a credit union, if you want to sell your property, or if the market conditions lower, or you want to get a lower rate, you can do that with absolutely no penalty at all.
Yeah.
And it really gets, and that's actually, I'd like to say that is, credit unions being very friendly, but it's actually written into the Federal Credit Union Act by Congress.
Wow. Very
So
interesting.
we can't do it if we wanted to, but we like to tout it as a nice benefit.
Yeah, it's a nice, that's good. Well, no, it's good for us listeners to know that this is what's advantageous. What do you think is the biggest misconception that you get around credit unions? Just having, again, you go around, you're speaking to folks, you're educating people on this concept. What do you think is the biggest misconception to our listeners?
People think the industry is much smaller than it actually is. And they don't realize that it's even a choice to even have a conversation with the start. No, even if you might have had this account at your local credit union that a job you started with 20 years ago, and probably at that time they didn't do business lending or commercial lending, but the industry is advanced. We've done this year at our organization, we did a $30 million loan. That's pretty good. That's getting into the big guys, or strong middle market type deals. So we can we do hospitalities loans, we've done multifamily apartments, but most of the time it's getting people to take that first step and have the conversation and consider us. Once I have a conversation with people and they understand the concept, I really don't have too many people slam the door in my face and say, that's stupid. Why would I want to get my real estate loans from a company that's trying to do things for a relationship at the lowest rates they can and pretty low fees?
Absolutely. I'm wondering, Mark, when I'm listening to this, is like, what do you think is the why is this not as talked about? Or maybe is it just because you tell me, how come it's not the first thing that comes to mind for people? Is it just a newer part of the industry? Is it just people have a misconception? Is it just people are not educated on it? Which one is it?
Some of it's the history. Some of it's history. It takes a long time to move that history. And some of it's the long time of history. And it wasn't that credit unions didn't do this for years because they chose not to. It's that they weren't allowed. But now they can, and it's fine. Last year, credit unions did $40 billion in real estate loans, investment loans. So, and there's also, because credit unions too are a collection of small institutions, it's sometimes you don't see that because it's all these little tiny, almost community organizations, as opposed to the largest banks that are, we're not buying Super Bowl ads. But when you talk about people, how many people say, I want to have that relationship? So that's really kind of getting people to understand, to take that first step as an option. And then it's a pretty pleasant experience for the most part. Then I'm probably one of the worst salespeople in the country, because we just can talk about that relationship and get things done. And it's not a hard sell on my part.
Yeah, no, absolutely. I mean, people definitely value. I mean, if you're in it for the long run and you're listening to this, it's definitely, something to definitely at least consider. Now, as far as where can people tap in more into their, where do I find, am I Googling this? Am I reaching out to, a firm like yours that has, is part of the organization who can kind of funnel me through locally? What is the best course of action for someone who's like, I've only had my money with these institutions, even my current mortgage, even my HELOC, whatever it might be, or my hard money, private money relationship? How do I take that first step? And what would be the best perhaps action to take when you're taking that first step?
Sure. And once again, review that existing relationship in your portfolio and think to myself, do I have a credit union maybe that I haven't really thought about all these years? And then move on to that local market that maybe you've never thought about or didn't think you could access or didn't know what that place was on the corner. Give them a second look and look at their website. But really, many times what we do is we try to match people up. So we're very active on LinkedIn and our website at Member Business Financial Services. And people can connect with us or shoot us a message through mbfs.org. And let us know where you're at and what you're thinking. And if we don't have one of our lenders directly in your marketplace, we'll match you up with somebody who lends in your marketplace that you maybe didn't think of before.
Absolutely. And we didn't talk too much about the New Direction Lending. Is that something that you created on the side? Is that private money? How does that look like?
Sure. What I call New Direction Lending is the credit union friendly version of the online business loan. And because we've all seen the advertisements on cable news and popping up where you can get your money fast, quick, easy, and they'll give it to you tomorrow. And what we have found is that one of the biggest mistakes that business owners and investors make is taking that quick money to get it, and it just puts them in can put them into a snowball, almost kind of like a payday loan, particularly if you're a small business. And it just gets you into a cycle of debt where you're always having to finance this. Well, what the credit unions did is we actually New Direction Lending is a subsidiary of MBFS, and we have funding. We're a direct lender, and we give you that online, fast, quick, small business loan, but at a very friendly rate. Where, if you go through your Cabbages and On Decks of the world, you could be up 30, 35%. We give we give that same experience at a much, much lower rate that you can pay off at any time you want. And it's just, there's no daily payments that people get trapped into. And because we'll lend nationwide, we actually lend in 46 states for that program. And like I said, I think of that as the friendly, the credit union friendly version of the online business lender.
That's awesome. I love that. Well, Mark, I think you gave us a really good in-depth, feel of and look at this new avenue that our listeners, and including myself, can add to our tool belt. I think that's one of the things that I said before getting on the air, that it's just, especially when you don't know what you don't know, it's really important to know what exists out there. And then you have, firms like MBFS, who are able to kind of funnel that and help you make that bridge the gap per se with credit unions. So with that said, Mark, is there what is the one thing you would leave if someone's still on the fence, if they're like, hey, this sounds good, but I don't know, what is that one thing you would probably give them as maybe a one note as a key takeaway to walk away from, to plant the seed per se?
Sure. If you've always said, I wanted to value that relationship, I want to be an insider, the credit unions are a place to check out, because not only you're not a customer, you're a member, and that's who the ownership of the institution is for. So we're not sitting in our ivory towers, and everything that you've always said that you wanted in a financial institution, as far as that seat at the table, you can have that through a credit union.
That's fantastic. That's fantastic. And so just like that, you have it, and we'll make sure that we include everything in the show notes. If you are driving, make sure you keep your hands on the wheel. Make sure you check out mbfs.org. And then for New Direction Lending, that's NU directionlending.com. And that's where you can kind of tap into some of the resources. Did I miss anything there, Mark? Is there anywhere else the people can tap in more about and find out more about you? I know you're active on LinkedIn as well. Is there anywhere else we should tune in, or anything else we should tap into?
No, our websites and the LinkedIn pages are the easiest ones to connect with us. Hope to talk to some of your listeners soon. And I really enjoyed being here today.
Absolutely. And just like that, we are out.